Tonight we got the great pleasure again to have Steve Primo with us. He's going to be showing us how to hit the big moves. So with that, Steve, once again, welcome to the Candlestick Forum. We're always interested in your information.
Great. Thank you, Stephen. Thanks, everyone, for attending tonight, taking time out of your Thursday evening. Today, I want to give you an educational presentation about missing some big trending moves because I'm constantly getting emails or asked by a lot of prospective students who we teach around the world. Like they say, Steve, I always seem to miss these big moves. I hear of other people catching them, and maybe I bought something and I got out too early, or I was thinking about getting in something and then I didn't do it and then it took off. And I always seem to miss the big ones. For example, let me share with you this next slide here, because this actually happened earlier this past year. Yahoo Finance reported that Chevron wanted to require a major Houston area upstream energy company. That was APC. Okay, that came out sometime mid-year last year. And if we look at the chart, we see here that the stock was basically going sideways, not doing much, and then it took off on that news. And this is where most people will say, boy, I was interested in that. I was kind of looking at that, and I didn't do anything. Or maybe I had bought it, and then I got out and broke even or made a little bit of money, and I missed it entirely. Well, let's say you had waited to get in, and while waiting, you still missed even more because it went up even higher until it ultimately got bought out. Well, guess what? The good news is I'm going to share with you the entry rules, the complete entry rules to a very unique strategy that's specifically designed to capture these big trending moves. For example, this particular strategy, which I'm going to be sharing with you, the entry rules today, would have generated a buy signal right here a full week or so before and a day before the news came out. And so with those two signals, you could have potentially captured upwards of 30 points prior to that news coming out. So this promises to be a great educational presentation. You're going to see how easy it is to implement this process on our new platform. This is the PTS Primo charting platform. I designed this with Pro Trader Strategies so that you could really teach you how to trade these big trending moves. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. And 10 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders. We are first and foremost simply an educational company. That's all we really try to do. We don't promise to have a strategy that never loses money. We don't promise to make you a millionaire in 6 months or retire. All we want to do is give you sound fundamental education that stood the test of time. Now, I've been trading for 43 years now, 43 starting in January. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is or does, it doesn't mean you're any more special than anyone else. It just means that if you wanted to purchase or sell a particular stock or equity, the floor broker had to walk up to the trader who specialized in making a market in that stock. So I did that. I made markets in about 50 or 60 stocks. I was making markets during the crash of '87 and then the bull market that followed. I've traded straight up markets, straight down markets, sideways markets, and virtually any system or trading technique or method you can think of, I've traded before. So in my 42 going on 43 years of experience, I know what works in terms of consistency and I know what doesn't. So this is what we do at Specialist Trading and Pro Trader Strategies. We simply provide you with the education so that you can make your own trading decisions. I'm sure Steve agrees with me that that's really how you become a consistent trader, by putting yourself in the driver's seat, not relying on someone to tell you what to buy or sell, but by being educated and then making your own qualified decisions. In my 42 years, this is the only way one becomes a consistent trader. So I'm going to teach you the entry rules to a great method. Hopefully you'll be able to capture some of these really strong, trendy moves. But before we begin, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of real recent performance results using this particular method. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Excuse me. So as you're taking a brief moment to view the required disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's my handle right there, abbreviation for Specialist Trading. You may want to copy that down. Every day I post different information, anywhere from signals that our strategies have generated to little bits of financial wisdom I've accumulated along the way. So lots of great free educational information. Please feel free to follow us on Twitter. Now, as I stated in the opening statements, we're a little bit different from other companies in that our only goal is simply to educate you. We are first and foremost an educational company, and you'll see that today in how much attention to detail I give in trying to educate you and so that you'll learn how to apply this particular method. So, as my mentors taught me when I was struggling some 42 years ago, they taught me what was called the specialist edge. This is an edge that's rooted in simplicity, where I've learned in my over 4 decades of trading that it's actually the simple things that work. I'm sure if you've studied with Stephen Bigelow long enough, you'll notice that everything is really simple if you learn how to listen to the market. And once you strip away all the outside noise and all the fundamental news and things like that, you really start to see what the market wants to do. And then just all you have to do is just jump on board and follow the market. So this is the basic concept we teach. Our goal is simply to teach you, not to trade for you, or not to tell you what the perfect time frame is or the perfect market, but simply to teach you how to trade with the specialist edge. This is the same edge that was taught to me some 4 decades ago, and what I truly believe has sustained me for that amount of time, and hopefully we'll be able to do the same for you. Now, since this is going to be conducted like a classroom, I want to take as many questions as possible, but I like to take the questions at the end. So if you have a question, a particular slide, something doesn't make sense, oftentimes if you wait for the very next slide, your question will be answered. So if you have a question, please wait till the end in the next half hour or so, and then I'll reserve the last portion for any questions, okay? I think this is being recorded, so most of the time if you have to leave early, if you're having technical issues, you'll see a copy of this recording later on. Okay, so with that stated, let's begin today's presentation. And we're going to be talking about a great method for capturing these trends. In fact, it was specifically designed to capture these trends. And this is called strategy number 3A, one of our premier strategies for capturing big trends, strategy 3A. So let's give you some of the highlights of this particular method. It's a continuation strategy. If you're not familiar with what a continuation means, rather than looking to catch a bottom or catch a top, what a continuation strategy does is look for an already established trend and then wait for some type of pause or some type of faltering and then wait for the continuation of the trend. That's when you jump on board. Very similar to a train. Let's say you're waiting for a train coming into the train station. You're waiting for it to come in. It comes in, it stops, you jump on board, and then it continues in the same direction. All right? That's what we're doing with this particular method. Now, the way it does this is by applying a unique Bollinger Band setting, a little different from the way the Bollinger Bands are usually set up and applied. And we usually only reserve this particular setting for the members of this course. But guess what? I'm going to share that with you today so you can start adjusting your Bollinger Band setting. Now, as I stated, it was designed to trade quick, powerful trends. And the beauty of this method is that you can apply it to any market, any time frame, and any direction. Now, in today's presentation, I'm mainly going to focus on stocks, but don't worry. If you like to trade E-mini futures the way I do, I mainly focus on intraday trading of the E-mini futures. If you like to trade currency pairs, if you like to trade Bitcoin, if you like to trade commodities, it makes absolutely no difference what market, what time frame, or what direction. You can apply strategy 3A to all the different markets. So don't get caught up in thinking that it only is supposed to be for stocks, okay? Now, with all of our methods, regardless of the strategy 3A or any of our methods, we always tell our students, in fact, we require them to paper trade first. So I know a lot of you, your eyes are going to light up and you're going to go, wow, this is amazing. I'm going to start trading this tomorrow morning. And I can almost guarantee you that you'll lose money. Not because the strategy is faulty or that it's always losing, but because most traders jump in too quickly, and that means they haven't studied the process, the rules enough, and so either they've applied the Bollinger Band setting incorrectly, they've entered at the wrong spot, or whatever, and so that's usually what happens. So please, go through this process I'm going to be sharing with you today, and even though I can't give you all the rules, I'm giving you the entry, and if you've been trading for a while or use some of Steve's techniques, you'll be able to apply a stop and an exit point as well very simply. Now, the last thing I want to say is that all of our methods have the specialist edge, and this is consistency. Everything is very consistent, but most students think consistency means that, well, that means that they always win all the time, right? That they're always generating winning trades. No, that's not really what consistency means. Consistency is an awareness that there will be losses from time to time, all right? But a consistent method is able to recoup those losses rather quickly sometimes on the very next trade or setup. So that's what consistency is, a two-step forward, one-step back approach. The one step back meaning that you will have losses, and that's okay. You're aware that they will have losses. In fact, I'll show you a couple in today's presentation, and I'll show you how quickly they were recouped on the very next setup. So remember, you will have losses. That's perfectly okay as long as you keep them to a minimum and you jump on board and don't just go in the corner and sulk the way most traders do whenever there's a loss and say, well, this stuff doesn't work, because oftentimes you'll miss recouping that loss on the very next setup. Okay? All right, so let's give you a brief refresher course on Bollinger Bands. If you're not familiar with them or if you've never used them before, these are the standard Bollinger Band settings. A very good tool, a very good indicator, and these are the settings. I'm not going to go into the inner workings of the Bollinger Bands. Trust me, I wouldn't even know what they are. I'm just going to show you what the basic settings are, because the Bollinger Bands are three distinct bands. Now, the middle band is simply a 20-period simple moving average. That's all it is. Then you have a band on top of that and a band below it. Now, the distance they are is called the deviation. The distance it is above and the distance the lower band is below. That's usually set to 2. So obviously the above band would be +2 and the lower band would be -2. And if we apply that to an older chart here of Facebook, this is what the Bollinger Band looked like. Okay, if I'll get up my little pointer right here. The upper band right here is moving at the top and moving sometimes in the same direction, oftentimes in a different direction as the lower band. As you see, the lower band is going down, the upper band is going up, and we have the middle band in red here, and which is simply the 20-period moving average. Now, the traditional way of looking at these, or one of the basic traditional ways, is when these bands constrict, as you see the upper band is coming lower and the lower band is going up, you're constricting, you usually get some type of volatility spike, okay? It's a great tool. It's a great way to use it. We're just going to take it to a different level, all right? So let me show you what we're doing here. Here's our proprietary Bollinger Band setting. This is what we're going to be applying in a little different way for Strategy 3A. It's going to tell us where to enter, all right? So what we're going to do is simply change the deviations. We're going to leave the middle band, which is the 20-period simple moving average, the same at 20. It's just a 20-period simple moving average. That stays the same. What we're going to do is change the deviation. We're going to go down to fractions. So instead of them being at +2 and -2, we're going to go to the upper deviation at +0.382 and the lower band deviation at -0.382. Okay? So they're the same distance below and above. They're just gone down to fractions. Now, I know a lot of you are saying, oh, is this some Fibonacci, some weird mystical setting here? Trust me, when my mentors taught me this some 4 decades ago, I said the same thing, and they said, no, these are basically the way we were taught, and these seem to work pretty well for what we're trying to do here. If you want to experiment with it and use another setting, that's perfectly admissible. Remember, these are not systems that mean they have to be written in stone here, and you can only trade them one way. These are strategies, meaning that you can alter and edit them to meet your needs. But trust me, we've altered and edited them for years. These seem to be the best settings at +0.382 and -0.382. Okay? You might want to write that down, but it's very simple. And just all you have to do on whatever platform you're using, go into your edit box of Bollinger Bands and just leave the moving average the same at 20 and just edit the deviation to 0.382, plus or negative. Now, if you're having trouble with that on your particular platform, you should be able to call the platform's tech support. They should be able to walk you through it or be able to do it, okay? All right, so that's the setting, and let's see how it would look. Now, here's the standard setting of the Bollinger Bands. Once we apply the proprietary setting, you notice how it's a lot smoother. All right, the same chart, but now we have this kind of a smooth river, a nice flow to it. Now, I know a lot of you are saying, well, Steve, I can't change the Bollinger Bands. Can I use Keltner channels? Can I use an envelope? Can I use, we always get that question from students. And I have experimented with those, and they just don't have the same results. So, unfortunately, it should be these settings with the Bollinger Bands, okay? I've tried to make things work with other indicators to match them. It just doesn't seem to have the same, to generate the same results. So, if you can't get it with the Bollinger Bands, I'm sorry, you just won't have the same consistency. Okay, so now let's go into the entry rules and let me share with you the process, how you would apply these rules. And remember, these are for buy setups, and then we'll just simply reverse them for sell setups. So it's not that complicated. If you want to go short, you would just simply reverse this process, okay? All right, step number one. Obviously, you want to plot the proprietary Bollinger Band setting on your chart, whatever platform you're using. Now, let me just share with you this older chart of Amazon simply for educational purposes only so you can understand it. On our platform, the PTS Primo charting platform, we made it totally simple because all you have to do is click on the strategy 3A in the upper green strategy tab. A drop-down menu appears, and then click on indicator, as you see right here. Once you click that on, guess what? The settings are already pre-formatted. There's nothing you have to edit. It's already right there for you. That's why it's so easy to use this, okay? Everything is pre-formatted. It's one click away, easy access. All right, so that's step one. Step two, you want to look for 5 consecutive price bars to close, either on or above that highest Bollinger Band, okay? So let's go back to the chart. And we see here that we have some bars here above, but then you see it's hard to tell, but they close a little bit below. We come back above, then we go back below. So we're oscillating above and below, back in, back below. But now we seem to have 5 consecutive bars right here, okay? So that's what we're looking for. We're looking for 1, 2, 3, 4, 5 bars that must close either on or above. Now, as you see, bar number 1 is intersecting. That's okay. It's just the close that matters. If we had closed below that highest Bollinger Band, then that couldn't be counted as bar number 1. But since we closed above, that can be number 1, and then we just want to have 5 consecutive closes above, okay? That's step number 2. Let's go to step number 3. What we're going to do now is once we have that 5-bar count, we want to enter to buy when price trades 1 tick. If we're looking at stocks, 1 tick or 1 penny above bar number 5. If we're looking at currency pairs, it would be 1 pip, okay? All right, so obviously we have the 5-bar count, and this is where we want to buy, right here, okay? So that's what we're looking for. We're looking for 1 tick above there. Now, here's what we have to tell you about, a little prerequisite here that's not in the rules, but it may take you, if you're lucky enough, you'll enter on the very next bar, okay? And remember, it doesn't have to close there. It just has to trade there. So you don't need to close above the bar number 5 high. All you have to do is just trade there, interbar. Many times it'll trade there and then close lower. That's okay. That's just your entry point, or one of the standard entry points. There are roughly up to 4 or 5, sometimes up to 7 different entry points in our courses. I'm sharing with you the standard generic entry point. Okay, so the thing I want to point out is, let's say you don't enter on the next bar. Well, you still wait for it to be up there, up above bar number 5. Let's say the second bar never goes there. As long as the bars are above that highest Bollinger Band, the setup is still valid, okay? So as long as we are remaining above this Bollinger Band right here, we're not closing below, you can wait 2, 3 bars, you can wait 20 bars, okay, as long as you are somewhere in this realm. But if, let's say, the price and the closing starts to come lower and lower and then closes below this highest Bollinger Band, well, then that means that most likely you should negate the setup because we've run out of energy in the uptrend. In other words, we're trying to have a continuation move, and most likely this isn't a continuation setup. We're running out of steam. The momentum has lost. So we would suggest that you negate this setup and look for another one, either wait for the next one in this stock or look for another market, because there's literally dozens of these being generated all the time, okay? So let's see what happened on this particular setup. Well, we were lucky. We got long on the very next bar, and by the close of the day, we have a winning trade because we're in there. Now remember, I can't divulge what the exits are, but you can use what a standard exit that Steve has taught you, I believe, with his proprietary methods. You could use your own. You could simply double the risk. You could do the same thing by plotting a stop level. Those are all within the course rules. I just can't share them with you right now, but I've given you the entry, which in my opinion is the most important rule. And so let's say you would have gone long Amazon here, and remember, you don't have to buy the stock. We realize Amazon's expensive stock. You could have purchased calls here, all right? It's entirely up to you. Remember, we're just an educational company. We're just teaching you these high probability setups. How you want to trade, whether stocks, options, whatever market, it's entirely up to you. But this would have been a good trade because look what happened to the stock going forward, okay? So this is a perfect educational example of how this process works. I know this is an older chart, but I just wanted you to get the idea of what to do here. Now, it's extremely simple. As I said earlier, remember, as my mentors taught me, the roots to consistency are always found in simplicity. I know a lot of you will say, well, this is just too simple. I mean, what if news comes out? What if there are bad earnings? What if, fundamental economic reports come out? Listen, if those things are important to you, then, you may want to take caution when a signal is generated. But trust me, when I was on the floor, I was in charge of making markets in roughly about 50 stocks. This was some 40 years ago. And I used to make markets in roughly 50 stocks. And in doing so, I had to keep track of all the earnings estimates of all the different companies. I made markets in Waste Management, US Air, IBM, just for a few of the stocks, Reynolds Metals. These were all stocks I was making markets in. And unfortunately, even though I kept estimates of all the earnings and all the fundamental news and jobless reports and jobless claims and things of that nature, I couldn't make a dime. It just wasn't working for me. I was lucky enough. I had some mentors who saw how much I was struggling, and they said, listen, Steve, if you're just trading for the short term, these are their words. They said, there's no reason why you have to focus on fundamental news. If you want to, that's fine, but there's no reason to. It's because the market usually tells you what you need to know, and I know Steve believes in this as well. Everything you need to know is right there in front of you on the screen. So if you're investing for the long term, sure, you need to know about the inner workings of the company. But if you're holding something for 2 weeks, a couple of months, it really doesn't matter. It's not that important. And it took me a lot of courage to let go of those things. But once I did, I never looked back. And guess what? I haven't looked at news or earnings or anything of that nature in over 4 decades. So what I'm trying to tell you is there's no reason, in my opinion, it's not required to look at that. If you feel you must, then I'm not going to stop you. Remember, we're not here to tell you how to trade. We're just teaching you things that have shown high levels of consistency. If you feel that you must look at news and look at earnings, that's fine. But if you're going to ask me, is this part of the requirement? No, absolutely not. In fact, none of our methods rely on that at all. And as I said, I've been trading for 40 years. I stopped looking at the news some 4 decades ago, and I'm still here. So I'm living proof to show you that it really doesn't, it's not a requirement. Okay, so let's look at some more recent 3A examples. That was an older example, so you could understand the concept. Let's look at some recent things that happened within the last month or so, okay? All right, here's an example in, if I can look at letter O, okay, if I get out my glasses here, letter O. All right, now obviously we've plotted the Bollinger Bands already, so we know that we are oscillating originally above, then we're below, but right here it looks as if we have a total of 5 bars. So we do the count, and we see that, yeah, we have 1, 2, 3, 4, 5 closes above. So this is where we want to go long. Our software automatically generates an up arrow there, so you know that you're in line. All right, we teach you the rules, but we also have the software generating up and down arrows to check your work. So you're right, that's a valid buy setup. You want to buy 1 tick above as long as it stays above that highest Bollinger Band. And it took a couple of bars, but you eventually got long. And in the next couple of weeks, it's a nice quick 6 points to the upside, okay? All right, let's look at XLNX. We're oscillating within the realm of the Bollinger Bands, and then we have a number of bars below. So we count that, and we see that it's a total of 5 bars that closed below. I know most students will say, well, Steve, this is major, major support. That's that Fibonacci support. That's where all the institutions are buying. How can I sell here? Well, listen, if you don't want to take this setup, you don't have to. Once again, this is not a system. But what is the market telling us? Well, by the very fact that we have 5 consecutive bars closing below, it's telling us that's a valid sell signal. But we're not going to sell at the market. It has to trade 1 tick below bar number 5. As long as we don't close above that highest, or I should say the lowest Bollinger Band prior to entry, this is a valid setup. So we got short on the very next bar. Could have purchased the puts, it's up to you, and it was a quick 8 points in the next couple of weeks, okay? So what happened to the support? What happened to the major Fibonacci support? See, this is why we only teach you things that we find to have high levels of consistency, and usually the market knows what it wants to do. All right, let's look at Apple. This just happened in the middle of October, okay? We were originally above the Bollinger Bands, then we closed below. Now we have a number of closes, consecutive closes, above, okay? So As we see here, 5 closes above, and we're only looking at daily bars. But remember, as I said earlier in the presentation, it doesn't matter what time frame. You can apply this to 5-minute bars. You can apply it to weekly, monthly. This method works on any market, any time frame, any direction. All right, so we're looking at daily bars of Apple. We have a valid signal here to go long. Okay, so this is represented by the green arrow. And we went long, and here's where, once again, we say this is not a system, this is up to you. We want you to make your own decision, because as you can see, Apple gapped up. Now, some of our students say, well, Steve, psychologically, I can't buy something gapping up like that. All right, then don't take the trade. There are dozens of setups being generated all over the place. It's up to you. That's why we don't have statistics, because some of our students enter on the gap. Some of our students will wait for a little pullback. Others use our other proprietary entries. There are dozens of ways to trade this. 2 students can trade one of these setups and get entirely different results. One student can make a point. The other one can make 10 points. So that's why we don't keep any statistics, because we encourage everyone to trade differently. You know, one student may want to use a wide risk parameter. Another one may want to use one of our tight stops. It's entirely up to you. Remember, we are an educational company. We're not a statistical company. We just share high probability setups that have stood the test of time. So if you decided to get long on Apple on this gap up here in the middle of October last month, well, that would have been a wise choice, because the stock went up 30 points coming into the first week of November here. Okay? Not a bad little trade, right? And I'm sure some of you say, well, yeah, it went up because of the market, because of fundamental news, well, remember, we don't look at that. If you wanted to, that's fine. But all the decision was based off of this pattern that we're sharing with you. All right, let's look at a daily chart of Yum. All right, Yum Yum Donuts, Y-U-M. All right, someone could say, well, Steve, this is a bullish engulfing pattern, but remember, we are below the Bollinger Bands here. So this is actually a sell setup, 5 consecutive bars. Now, this bar looks as if it closed, but actually it closed just below that low. So the setup is still valid. We waited a couple of days, and then ultimately we got short. Okay? So we're short Yum Yum, and guess what happened? A quick 13 points. Now, once again, I'm sure there was some news or some event that caused this to gap down like this. We had no idea. We never predict how high or how low something will go. We just follow the market. Now, the market was telling us they wanted to go lower, so who were we to argue with it? We just jumped on board, and you can use any one of our different exit points to establish where you want it to exit. All right, let's look at a daily chart here of MUSA. All right, this is what I mean by consistency. I distinctly added this slide in because I wanted to share with you that, remember, consistency does not mean that, well, Steve says his methods are consistent, so that means they always win. No, consistency is an awareness that you will have losses from time to time. That is okay. What you want is a method that's consistent enough to recoup those losses. For example, we have a sell signal generated in MUSA here. We have the 5 bars below. We have our red bar that was automatically generated. We went short on the very next bar, 1 tick below. Okay? So you could have, if you have enough of money in your account, actually shorted the stock, or you could have bought puts. It's up to you. And then look what happened in the next week. Most likely you would have been stopped out. If you used a very top, a tight stop, or even one of our moderate stops, you would have been stopped out. So let's say you used a wide stop here and you lost 5 points, okay? All right. So you got to just, rather than go in the corner and you lick your wounds the way so many of our traders do, we say, listen, you always have to be diligent because there may be a setup that's going to recoup that loss. For example, what do we have on the next week here? If you look closely, you would have been stopped out most likely on this bar, and what do you have going forward? We have consecutive bars that are all closing above that highest Bollinger Band. That's 5 consecutive bars. So the software automatically generated a buy signal. Okay? So you can't just go in there and say, this stuff doesn't work. This guy, Steve Primo, he just once again told me something that doesn't work at all. And if you had done that, you would have missed this setup. You would have missed going long on the very next day. This was just last month. And you would have missed potentially capturing 30 points coming into the first week in November, this past week. All right? Once again, some news or something happened which caused the stock to gap up like this. We have no idea. It's not, in any way important to us why it goes up. We really don't care. All we know is that the market told us it wanted to go higher. So therefore, it's our job to jump on board. All we want to do is add a little structure in the terms of this 5-point count, and then decide where to get in, decide where to place our stop, and decide where to exit. Trading is really simple. It's the trader who makes it more complicated than it has to be. Okay? All right, here's an example here going forward in SHAK, S-H-A-K. Originally we're below, but then we have one bar closing above, so we have to recalibrate our countdown again. So now we have bars closing below. In fact, we have a total of 5 bars closing below. So that qualifies as a valid setup. The software automatically generates a red bar, a red arrow I should say, and we know that we're going to go short 1 tick below. Now, it could happen on the next bar. It could happen on the 10th bar. As long as we don't close above this lowest Bollinger Band, all bets are still on. So let's see what happened. Well, it took a couple of bars, but we initially got short on the second bar. So now we're short S-H-A-K. And once again, another gap down coming into the first week of November, 17 points. Do you notice how some of these stocks that gapped up 30 points, they were happening around the same time? So each stock, take each signal in each stock for what it is, because you're seeing stocks that gap down on the same time frame, same time period that stocks gapped up 30 points. So we tell our students, listen, you can trade the way you want, but we take each individual stock for what it is. All right, so if the market seems to be going up, but you get a sell signal and you don't mind going short, just trade the sell signal. All right, here's an example now in ABMD. All right, we're kind of touching and oscillating the Bollinger Band setting. Now we have 1 bar close above, and then we have a series of bars closing above. So if we count, that is a total of 5 bars that consecutively closed above that highest Bollinger Band. All right, so the software automatically generates an up green arrow, and that's where we're going to enter on that dashed line, as long as we stay above the highest Bollinger Band. This was coming into the end of October once again. And guess what? Another 32-point rise in the next 3 or 4 days. Now, this gapped up a little bit. You would have had to make a decision again. Am I going to buy on that up opening? But that would have been a wise decision. All right, let's look at another example roughly around the same time in McDonald's, MCD. We're above the Bollinger Band, and now we have a total of 5 Bollinger Bands closing below. The software automatically generated a red down arrow, and we know that we're going to go short 1 tick below. We would have gone short 1 tick below on the very next bar. Now, I know it's hard to see here, but it did actually open a few ticks below. Now, at this point, this is where students say, oh, gosh, I'm losing on this trade. The minute I sold it, it's up. I bought the puts, and this guy, Stephen Primo, his stuff doesn't work. He's just trying to sell me some, thing that is just, there's no validity to it. I'm going to stop myself out because I don't want to take a loss here. I can't take another loss. This is the way most traders trade. Remember, you have to study this process, stick to the rules. If you have a wide stop, say you have a stop up against these old highs, you have to stick to it. If that's too much risk for you, then don't take the trade. But it would have been wise to stay in this trade because look what happened. All right? Well, you would have got scared on this next 2 bars. Had you used a wide enough stop, you could have taken advantage of 20 points coming into November right here. Okay? Someone could say, well, how do you know this? I mean, it looked as if it was going up. Remember, we don't know what the stock's going to do or what the future is going to do or what the currency is. We never predict anything. That's not our job as educators. We're just trying to teach you high probability setups that have stood the test of time. I've been trading this strategy for roughly 3 or 4 decades now that I was taught on the floor of the exchange. So, if it's still working by now. So, this is what we want to share with all of our students. All right, let's take one last look here at Tesla, okay? Now, we all know that Tesla's been going up if you've been following it, but this is the way most students say. They play the victim game and say, I never have a chance to get involved with these big upward moves. How come I never get these things? I always hear my friends or somebody else made a big killing in the market, and I never had a chance to. Well, you can't say that anymore because look at this example here. We're originally below the Bollinger Bands. We're oscillating within the realm, but now we have a close above, and then we have a number of closes above. So if we do our countdown, we have a total of 5 closes. Now to check our work, we see that the software automatically generated an up green arrow, and so we're not going to just buy at the market because sometimes you'll see that up green arrow and then the next bar will go straight down. So we have to wait for confirmation. Remember, this is where students usually lose because they say, well, Steve, I did all the right rules. We had 5 bars there and I bought on the close. That's not the rules. The rules are that's just the setup. you can't go long until it trades one tick above. Now, if you're a conservative trader, a lot of our conservative traders like to use a different entry where they want it to close above. Remember, there are different ways to enter. I'm sharing with you the most generic and most standard entry point. So we're not going to enter Tesla until it trades one tick above prior to closing below that highest Bollinger Band. So let's see what happened. Well, we were lucky enough. It traded there on the very next bar. So we're long. We could have most likely bought the calls or some type of spread because, it's up to you. I know this is expensive stock. But once again, that would have been a wise business decision because Tesla went up 80 points in the next couple of weeks, okay? So remember, you have the information now. You can't play that victim game. Traders, as long as I've been trading, traders love to play the victim game, and they love to say, how come that doesn't happen to me? How come I lost? Well, it's because most likely you're using faulty information that hasn't stood the test of time. We only teach our students methods that are highly consistent in trading the markets. Now, let's go back to the original slide I shared with you. Remember we talked about APC, how it was bought out, and how traders like to say, how come I couldn't have traded that? I was thinking about buying that, and then I missed it. Well, let's go through the process, and we'll show you how simple it is on our platform. Here's what you would have done prior to that news coming out. First thing you do is click on strategy number 3A on our platform. The drop-down menu appears. Click on indicator. And the Bollinger Band setting is pre-formatted. It's right there. Now you see, up until this point, it was going above and below, all right? Until we get to right here at this point, all right? We had closes above. So you do the count, and you see it had a total of 1, 2, 3, 4, 5 closes above. So now we want to check and confirm that that's a valid setup. So once again, we click on strategy 3A. The drop-down menu appears, and this time we click on signal arrows. And guess what? You accurately identified a valid setup. So see, you're learning how to do these things on your own. This is what we want. We want to teach you how to spot these setups on your own, so that you don't have to rely on the up arrows. You'll know exactly where they are. But guess what? Look what happened after that. Bar number 2 went down, so we never entered on the next bar. And then the next bar, bar number 3, closed below the highest Bollinger Band. So what does that tell us? That tells us that this setup is negated and we're not going to take it, because even though we continue to go sideways many times, that means that the most of the momentum has left. So we don't want to get involved in this. All right, so it doesn't mean that we have to change the stock. We can still watch, and look what happened again. We got another count. 1, 2, 3, 4, 5 bars close above. So we check our work, click on the drop-down menu, click on signal arrows, and yes, now we have another valid setup. So here's our valid setup. It's a little bit difficult to see, but you would have gone long on the very next bar, because the very next bar actually traded 1 or 2 ticks above. So you would have entered, okay? You would have entered using our standard entry, and even though it closed lower, you would have been one of the lucky ones, because the very next day that news came out, and you would have been able to take advantage of a good 15 or 20 point gain, all right? Now, once again, someone would say, wait a minute, but I thought you didn't look at the news. I thought you didn't, look at earnings or things that, earnings or some type of rumors going around, buyout rumors. We don't. Well, then someone would say, well, how did you know to buy that? Because the market told us. Most of everything I trade, the market tells me what it wants to do in advance of news events. That's why I don't need to look at news. If you want to, feel free to. But in my opinion, there's no need to. I never look at news. I never look at earnings. I'm usually just watching a movie on TV. I'm not watching any, stock or investment news shows. So most likely, if I had taken this trade, I'll be honest, I didn't take this trade. But if I had, I would have exited here. But it would have been a nice thing to hold on, because look what happened going forward. The stock continued to go up, and you could have potentially captured 30 points. Okay. Let's look at some other markets. I want to share with you some other examples. These are older charts, but they use the same principle. Let's look at an hourly chart in the E-mini futures. The same principle. We have a total of 5 closes above, okay, on an hourly chart. That's our buy signal right there. We want to go long 1 tick above that bar, bar number 5. We would have entered on the very next hourly bar, and we had a nice 12-point profit going forward. Roughly $600 potentially could have captured per unit. We can go down a time frame. Let's go. I believe this is a 10-minute time frame, okay? Same concept. We're below, but now we oscillate back down below. We have 1, 2, 3, 4, 5 closes below. So that is our count. That's a valid sell signal that's generated. We go short if it trades one tick below, and it did on the very next bar. So now we're short on a 10-minute time frame, 17 points in the next couple of hours or so, okay? 850 potential dollars you could have captured per unit. Now, I'm not saying you would have, because some of our traders like to take a quick point and they say, thank you, I'm out, I'll look for the next setup. Others like to grab as much bang for their buck and said, no, I'm going to wait for as much points as I can capture. The good news is we teach you these different ways in the course. So remember, there's not one way to trade this. That's why there are no statistics. I'm sure I'm going to get tons of questions at the end of this presentation saying, what's the win-loss ratio for this? Remember, we don't keep stats because we encourage everyone to trade differently, and we cannot keep stats on virtually the way everyone trades. There are just dozens of ways to trade strategy 3A. How about currency pairs, all right? Here's a daily chart of the Canadian dollar, I believe, all right? 5 closes below. A valid sell signal is generated. We go short 1 pip below bar number 5. There's our entry point on the very next bar, and 642 pips you could have potentially captured, all right? Once again, not looking at economic news that affects the Canadian dollar. You can if you want to, but the market told us it wanted to go lower, okay? All right, so let's recap before we go into question and answer. Remember, it's a continuation strategy. You know the count. You know what to look for. We're waiting for a trend to be established, either 5 bars above or 5 closes below the Bollinger Band setting, and that's how we determine whether we're going to continue trend or not. As you just saw, this is designed to trade quick, powerful trends. It can be applied to any market, any time frame, in any direction. Now, the majority of these examples were all stocks, but I just showed you some intraday trading of the E-mini futures. I showed you currency pairs. It makes no difference. So I don't care what market you trade. I don't care what direction. I don't care what time frame. You can apply this to any market, okay? But remember, please paper trade this strategy first. I can almost guarantee that most of you will lose money tomorrow trading this because you didn't study, you didn't work out the proper proprietary edit settings for the Bollinger Bands, you didn't do the count count, you entered at the market, you didn't wait for it to trade 1 or 2 ticks above or below. So remember, study this first so you can really understand it like the back of your hand before jumping in, all right? Now, our edge here is consistency. As I said earlier, there will be losses from time to time. That's okay. What you want is a method that's able to recoup those losses. So study this, and you'll see the consistency happening over and over again. So, before you ask me questions, I want to ask you one. Do you think the strategy, the entry rules I just gave you, could have helped you trading this past year? Do you think it can help you going forward into 2020? Well, we have a great offer for all of you taking time out of your Thursday evening today and joining me in this educational presentation. We're going to offer you the Strategy 3A course along with a 30-day use of our PTS Primo charting platform. And all the examples you just saw right now were generated using our platform, and we specifically made everything simple so that it's just one click away. You don't have to edit the Bollinger Bands. You don't have to, guess where the setup is because it will generate those up and down arrows for you, okay? This is a 30-day use of our platform with the Strategy 3A course included. But we're not going to just stop there. Now, obviously, with this offer, you're going to get Strategy 3A, okay? You're going to get all the course rules. You're going to know all the different exit points, all the different entry, the stop placement. But on top of that, you're going to get some other features. You're going to get what we call our buy-sell line. This is a great tool, a proprietary tool we have specifically only on our platform that determines the overall trend. And we have 4 different ways for determining the overall trend. And one of the ways it does is by coloring the back of the screen. As you can see here in this slide, when you have a blue background, that's telling you the overall trend is up. And when you have a reddish-orange background, it's telling you the overall trend is down. So right off the bat, you know whether you should be buying or selling. The odds are in your favor if you only buy with that blue background and you only sell with that strategy signals with that red background. This is a great tool. You'll also get this included in that. Along with that, you'll get some of our best short-term trend identifiers. This is based on pattern recognition. This is another great feature included on the platform. But here's the thing I'm most proud of. Here's our signal scanner. Now, you have Strategy 3A for 30 days. Now, I know a lot of you aren't able to be in front of your computer 24/7. You come home from work. Well, guess what? You can scan for the next day's setup for Strategy 3A. Let me show you how simple this is. Once again, you go to that upper icon for the Strategy number 3A tab, And where the drop-down menu appears, where you were clicking on the arrows in the indicator, now you just want to click on Scan, and you'll see this page appear, all right, for Strategy 3A. What you want to do now is simply click on Load Symbols, and we provide you with symbol lists for Bitcoin, for stocks, for the S&P 500, for NASDAQ, for the DAX exchange, for European markets, for just a number of their commodity exchanges, for futures, currency pairs. Whatever you're interested in looking at, you simply click on that, and in a matter of moments, you'll see them appear. This is just the Dow 30, okay? After this appears in about 30 seconds, you just hit Scan. And then in about another 30 seconds, you'll see a series of red or green bars. The red bars simply mean that that's a sell signal in the corresponding stock. The green bar means that there is a buy signal. Now, let's say that I had given this webinar for the Candlestick Trading Forum a month ago, okay? And you decided to take this offer and you said, wow, I just scanned. I've been interested in looking at Beyond. And this is the way it looks. And I just scanned, and guess what? In the beginning of October, it generated a sell signal for Strategy 3A. And there's the 5 count. Okay, I've studied the course rules. There's 1, 2, 3, 4, 5 bars. And the software automatically generated a red arrow. So that's a valid sell signal. But remember, I know I'm not going to go short on the close. I have to wait for it to trade 1 tick below. All right? So I waited a couple of days, and I got short Beyond. Well, that would have been, once again, a wise business decision. You could have scanned for that. It would have come up on the scanner, and the stock has dropped 50 points coming into this week. This was a snapshot I took of yesterday of Beyond. This just shows you how this really works. I'm not showing you slides that were 6 months old. These are things that happened within the last couple of weeks here. So this is how simple it is to apply this. And along with that, you're going to get also 90 of the most prominent technical indicators included with this offer on our platform. You're also going to get a strength of trend tool. This is something I developed personally with Pro Trader Strategies, that it has a unique ability to determine if a trend is running out of steam or still has some momentum left in it. And then lastly, you have personalized tech support. If for any reason you can't load up a chart, you can't get the strategy scanner, personalized tech support will be there to answer any issue that you may have, okay? This is a great, great offer for you to use with our platform. This is the trading educational platform you've been searching for. I specifically designed it to make trading simple, okay? I want it to be as simple as possible. So here's how to take advantage of that. You're going to get the Strategy 3A along with 30-day uses of our PTS Primo charting platform. Now, normally, this offer costs close to $500. But because of our association with, Stephen Bigelow and Candlestick Trading Forum, we're not going to charge you that. In fact, for a very limited time, you can get all this, the 30 days PTS Primo charts, along with Strategy 3A for only $12. $12! I mean, think of that. You can't even go out to get fast food for a couple of people, a light dinner tonight for less than $15. But you're going to get this, all this information, usage of the platform for $12, all these different features, and you're going to get the course rules for Strategy 3A. Those are yours to keep, all right? You're going to get all of that, the online course of Strategy 3A, and you'll be able to apply that. But for 30 days, you'll be able to apply it on our platform for only $12, okay? So this is a great, great offer. Here's how to take advantage of this. Now, Pro Trader Strategies, I developed the platform, and they're in charge of all of our discounts and our pricing. That link you see at the very bottom of this page is the link that takes you to this great offer of $12. I believe it's not a live link, but I believe Becky has just posted a live link in the chat box there. So that will take you to the offer, the 12. That's a very limited offer. I don't think it's going to last more than a couple of days. I may be wrong, but I think it's very limited. It may be only 24 hours. So I would take advantage of that. It's a great, great offer. It's a great way to get acquainted with what we do and how to teach you. And for $12, you really can't go wrong. One other thing I didn't mention, I failed to mention, along with that offer, you'll get my personal email address. So if you ever have any questions, you can always contact me, and I'll be there within a matter of moments to answer your questions via email. So you can always correspond with me, okay? So once again, this is a great offer. I'm going to leave this information up. Thanks to Becky for posting the link there. And we have 5 or 10 minutes left. I'd be happy to answer any questions you have. So let me see. Open up the chat. Someone's asking, what are the Bollinger Band settings again? Okay, the Bollinger Band settings are, remember, the bands are set usually to 20-period simple moving average. That's the middle Bollinger Band. and the upper and lower deviations are set to +2 and -2. All right, that's what we want to change. We want to keep the basic 20-period simple moving average the same. We're not going to change that. We're just going to go down to fractions. Our differentiation is going to be 0.382. That's all it's going to be, above and below. So positive 0.382, negative 0.382. But once again, if you take advantage of this great offer for $12, this will all be pre-formatted on our platform. So there's nothing you need to do. It's already pre-formatted for you, okay? Someone has asked, does this work on daily futures? Yes, and remember, any market, any time frame, any direction. We have students who use this on 5-minute currency pairs. We have students that use this on weekly bars of the futures. We have students who use this on monthly bars of stocks. It makes no difference. Wherever this pattern occurs, you will have a setup. Now, once again, I want you, please remember, not every setup is going to be a winner. So this is a consistent method. That's why we say paper trade this. If you do decide to take advantage of this great offer, paper trade this first, okay? Are those the standard Bollinger Bands with the one setting change? Yes. So we're using standard Bollinger Bands. You're just editing the differentiation, okay, the deviation, okay? Does the signal become less powerful if you go beyond the 5 or 6 bars to enter? That's a good question. That would take something that we'd have to, have statistics and go back and look back years and years. It's been my observation that no. The only thing where it loses its power is when if you're looking at a buy setup, if it closes below that highest Bollinger Band. That's the only thing I would say. So I'm not going to quantify it and say, yes, it loses. The longer you wait, the less power it has. No, I would say the only thing you have to look at is if it closes below that highest Bollinger Band if you're going long, or if you're going short, it closes above that highest Bollinger. Then I would really recommend negating this setup and looking for another one, okay? Someone's asking, what is the cost after 30 days? I believe, Pro Trader Strategies, my sister site, handles all the costs and the discounts, but I believe the basic cost is only $97 per month, which is still great. You still get all these great features. You still get the uses of everything. But you may want to, contact them. They may even want to give you a better deal than that. Okay? I think this would be fun for futures, gold, currency pairs. Sure, we have a number of students who use this for commodities. Wherever you see these big, in fact, currency pairs and commodities, it's been my experience. Remember, this is not in any way a recommendation, but it's been my experience that those markets really trend the most. Because obviously there's so much more, capital going in currency pairs than there are in stocks, and a lot of money going in commodities. So that's where you get these huge trends. I mean, I've seen trends last in commodities for months, and in currencies, years. So that's where you want to take advantage of this great strategy, okay? What happens at the end of 30 days? Well, at the end of 30 days, it's no longer valid. You still get the strategy because it's an online course. So you still have that information. It's not like, you unlearn Strategy 3A rules. You'll still get all the exits, all the stop placement, all the different ways to trade it. You just won't get use of the platform anymore. And then you can decide if you want to keep going on or if you just want to cancel. It's entirely up to you, okay? I knew I was going to get this question. Mike asked, where do you put the stops for long and short? Once again, that's in the course. That would be like me giving you a free appetizer at a restaurant and then you saying, where do I get my free meal? Well, I can't do that because that wouldn't be fair to the majority of our students around the world who actually paid $500 for this. So you're getting a great appetizer right here for a free educational webinar tonight. But for only $12, you're going to get all those rules for stops and all those rules for exits. Okay, that's a great offer, and I'm sure the people that paid $500, if they're attending this webinar, are probably pretty upset right now because they're saying, "Guys, I paid $500 for this 2 years ago. Why am I spending $12? Well, I could have bought it for $12." Okay, so remember, you have all the information for entering. My recommendation, or I would actually go further than that. I'd say my requirement is you must paper trade this. Please paper trade this. Okay. Someone's asking, how does this compare to your other strategies? Well, there's no comparison. We don't compare strategies because each and one of our different strategies is for a different environment. It's for a different concept. We have strategies that look to buy pullbacks. We have strategies that are for very short term. They're in and out in like 5 days. Each one is for a different environment, so they're non-comparable. You can't compare things that are looking for different. Every trader brings his own persona to the trade, his own risk parameters. We have strategies that take on a lot of risk. We have strategies that don't take on a lot of risk at all. They take on very minimal risk. So if you're the type of trader that likes to be in and out of a trade, we have strategies for those type of traders. If you're like a strategy that likes to stay in as long as possible, we have other strategies for that. There's no way to compare them. You just have to find what works for you or what type of trader you are, and then we accommodate you with sharing with you setups that have shown high levels of consistency. There's no way to compare them because each one works for itself, okay? You know what? I think we're out of time, but listen, that's the email address if you have questions with Pro Trader Strategies. That's the phone number. But remember that link that they posted as well is the link that takes you up to that $12 sign up. If you have any trouble with that link, just call up Pro Trader Strategies at 310-598-6677. They would be happy to take your order over the phone. But remember, this is going to be for a limited time only, so don't sit on this. I know a lot of students in webinars I give, they'll say, well, you know what, I want to watch that webinar one more time. I'll wait for the recording. They'll watch the recording. They'll watch it for a couple of days, maybe a week, and then they'll say, okay, I'm sold. I'll take that $12 offer, and then it's gone. It's back up to $500. So these are all strategies that I use in my personal trading, that I use personally in my own trading. I trade mainly E-minis because of my schedule for giving webinars. I'm like Steve. I give a number of webinars throughout the day and the week. I can't be sitting watching stocks, so I like to trade intraday, and that's pretty much the way I was trained. So I use this on 5-minute time frames. This is a great strategy when you're having a fast market. If you're an intraday trader and you get one of those fast straight-up markets or straight-down markets, this is a great strategy to trade, okay? That's the way I like to trade it, okay? As we conclude, I just want to say thank you so much for attending. I want to thank everyone at Candlestick Forum, Becky, Jim, and most especially Stephen for inviting me to speak. And I really hope you got something out of this. I really wish you the best of luck. But more importantly, I look forward to all of you becoming students of mine in the Strategy 3A offer that we have. So thank you so much, and I'll give it back to the Candlestick Trading Forum. Thank you so much. See you next time. Bye-bye.
Thank you, Steve. Very good information. Everybody, for 2 cups of Starbucks, take a look at Steve's information. It's always good stuff. So I highly recommend looking at it. This gives you another couple quivers in your or arrows in your quiver to make good trades. Steve.